Good evening once again. I'm Scott Wapner on day 88 of the coronavirus crisis. Tonight, another strong day for Wall Street. The Dow soaring more than 1,300 points.
This has been a ferocious bounce back.
Stocks soar.
We're providing relief. We're providing stability.
Investors feel as if the Fed has their back.
I want to thank Democrats and Republicans in the Senate for unanimously passing the largest financial relief package in American history,
along with support from the government.
3,283,000 are initial jobless claims.
But it doesn't mean stocks are out of the woods. As virus cases jump, so do jobless claims. This CNBC Special Report, Markets in Turmoil, starts right now. Here's Scott Wapner.
It is good to have you back with us tonight. And given the big day we had on Wall Street, let's get you right to the futures to see if this momentum can continue. Right now, it looks like the Dow would give back 165. The S&P and NASDAQ also in the red. I caution, as I always do every night for you, it is early, volume is light. Today, though, stocks rallying after the Senate passed the stimulus bill and shrugging off a record surge in unemployment claims. The Dow rising more than 1,300 points. The S&P 500 climbing 6%, and the NASDAQ adding more than 5.5%. Take a look at these numbers. The Dow now up 21% since the opening bell on just Tuesday. That is the biggest three-day surge since 1931. The S&P up 17%, the NASDAQ nearly 14%. The big catalyst for the Dow today, once again, Boeing up 90%. You heard me right, 90% this week alone. Earlier today on CNBC, legendary investor Paul Tudor Jones sharing his thoughts on this record three-day rally and whether it can last.
My guess is one of the reasons the market's up right now is because of all the month-end rebalancing that the market's front-running. It sees the fact that there are going to be a lot of equities to buy. And that's one reason. My guess is we'll stay firm into month-end. And then we're going to be challenged in April. We're going to be challenged as we go through the epicenter, the peak of the epidemic curve. So I think that could bring us to a retest. It might even bring us to a fractional new low. But I do think the stock market's going to find a bottom. Once we get the peak in the epidemic curve, no doubt in my mind, the stock market will rally, and it should rally. And my guess is we'll be higher 3 or 4 months from now, 5 months from now, than lower than where we are right now. Investors can take heart that we've counteracted this existential shock with the greatest fiscal monetary bazooka. It's not even a bazooka. It's more like a nuclear bomb. That's literally the countermeasures that we brought in to sit there and to bring safety to our economic systems. There's a lot of undocumented workers. There are people who've been out of work for more than a month that will not be eligible for these checks. I can tell you food pantries have already seen a 50% spike in people going. We've lost our volunteers because people are afraid to go out in a variety of our organizations. This is the most important time for people to help the most poor because they're the ones that are going to suffer the most.
And that was Paul Tudor Jones this morning, getting emotional at a very emotional time for this country and, of course, for investors. Chris Hyzy is Chief Investment Officer for Merrill and Bank of America Private Bank. Chris, good to have you back with us. We speak tonight under very different circumstances than 10 or so days ago.
Yeah, no question, Scott, and it's been well discussed in terms of the amount, size, length, and strength of the liquidity that's been put into the system and at the speed that it has, not to mention the relief aid package, et cetera. And, you know, we look at this, we take a step back, and, 5 signs of a market bottom, you usually start with liquidity, and at the end of that market bottoming process, you look at things like the dollar. Is it weakening or is it still strengthening? And then you get into things like, climbing the wall of worry, which most bull markets do begin with. And that is something we haven't seen quite yet, except for today after the claims number. Now, it's only one day, but that claims number being a record, 3.3 million, and likely to still see bad economic data. The question's going to be in April, as Paul articulated, not just the virus data, which is serious, but what about the economic data? What does the market do? Does it take it in stride? Because the data is not going to be good. So from our standpoint, the bottoming process has begun. It's still relatively early to middle, but there's a number of phases that investors should watch to give better clues as to when we're fully out of the woods.
How about the momentum we've built over the last few days? How long can that last, given that it's been so hard, so powerful?
Yeah, I think it's important to kind of, pick apart the momentum. Actually, where is it coming from, how, and how long can it happen? In terms of this latest momentum, it started off with liquidity. It was short covering to begin with. It was a little bit of the long-term asset buyers that came in. They don't come in size. They come in slow. They build positions over time, as you so well know. But what we've seen recently in the last 2 days is the rebalancing. Rebalancing got completely out of whack, particularly at the pension fund level and some of the bigger institutional accounts that come in and need to rebalance at month end. And that's really what you're seeing these last couple of days.
That's what I heard is going to carry stocks potentially, and I use the word potentially seriously, that the market could go up tomorrow yet again, at least for part of the day. But then it's sort of all bets are off just because you've moved so far, so fast in the opposite direction of that thunderous decline.
Yeah, no question about it. We're getting out of phase one, the liquidity rally, then the rebalancing. Phase two is going to be about the economic buffer in our view. Is the relief package enough to buffer some of the sharpest contractions that you see out there on the street that people are talking about for the second quarter? We think it can, but more importantly, as Paul was talking about, is the virus data is not going to be good in April, and that's the biggest wild card. So from our standpoint is the economic buffer has been put in place. We'll know more between April and May. The momentum can occur if the virus data works along the lines of what we've seen with the financial and economic data, and that's still a wild card at this point.
They're going to be hard to look past that data coming out relative to the virus, especially in the New York area, Chris, as you know. Let's just say this. If you are inclined to buy, to try and take advantage of some of this momentum, where would you look?
Well, if you take a look at the fixed income market right now, negative T-bill yields. Now, it's striking for some, but you remember when. You go back, obviously, to 08, 09. You even go back to 01. And negative T-bill yields, if you think about that signal doesn't go away quickly. That's something that's going to be around for quite a long period of time. So think low rates. Think growth is going to have to shift from what used to produce growth to the new level of growth in the out years. If that's the case, investors should strongly consider free cash flow yield on the equity side. You can look at free cash flow yield in two sectors, healthcare and technology. Almost 50% of the S&P in those sectors produces free cash flow yield for the S&P. So you look at yield, you look at high quality, and you look at growth, and most of that is in U.S. large caps.
Appreciate you being with us once again, Chris Hyzy.
Thanks, Scott.
Talk to you again soon. The House vote tomorrow on the Senate's $2 trillion relief bill. Kayla Tausche tracking that as usual on where we stand, what's in it, and what isn't. Kayla.
Good evening, Scott. That $2 trillion package, the largest in American history, is expected to easily pass the House of Representatives tomorrow morning. And President Trump has said he would sign it immediately after, setting in motion an historic transfer of funds from Washington to hard-hit Americans. More than $1 trillion of this will be in stimulus money. Most Americans can expect $1,200 direct deposited in the coming weeks. Federal agencies will get nearly $500 billion. States and local governments will get $150 billion. And hospitals will get the $100 billion they requested. The lion's share of the funding for business will be in the form of loans, with requirements for employee retention, executive pay, and limits on share buybacks and dividends. The size and sector of the business will, in most cases, determine its eligibility for programs from the Small Business Administration, the Treasury, and the Federal Reserve. There are some seemingly unrelated riders here, Scott. $25 million for D.C.'s Kennedy Center, $20 million for 2 area universities, $75 million for arts and humanities funding, and $350 million for the State Department to assist migrants and refugees. There were some businesses that did not make the cut. The Postal Service got less than half of what it requested. Democrats stripped out $3 billion that would have gone to purchasing oil for emergency reserves. And then, Scott, the cruise industry, unable to borrow from these facilities. But a senior administration official tells me that several senators from both sides of the aisle want to fix that in future legislation. Scott?
And that's where I want to pick up with you, Kayla. I heard from one very large investor late this afternoon, outraged, really, that the cruise industry was even in line for a bailout, given the fact that they're domiciled overseas, that their workers are not U.S. nationals, they pay no taxes here in the United States, questioning why we're even having this conversation in the first place. And I'm wondering how that's translating up on Capitol Hill.
Well, I think there are several senators from the states of Washington and Alaska where cruise tourism is a huge business up there and also responsible for a good chunk of tourism employment. They have been making the case that this is an industry that needs support. President Trump has also been speaking with a close friend of his, Mickey Arison, the chairman of Carnival and also the owner of the Miami Heat, throughout the last several weeks about the industry's woes. And just this evening, Scott, the president said that he likes the option of having these industries re-domicile or re-register onshore here in the U.S., but we'll see exactly what conditions would get placed on those companies if, in fact, there is aid in the future.
Carnival was a one-time sponsor of The Apprentice. Let's not forget that. Kayla Tausche, we appreciate your reporting once again for us from the nation's capital. Joining us once again tonight is the former FDA commissioner and current CNBC contributor, Dr. Scott Gottlieb. Doctor, welcome back. It's nice to see you again.
Thanks.
Let's continue our theme from last night's town hall, looking at the path forward. Assess where we are tonight as you look forward.
Well, we have to see whether or not there's going to be broad spread in other cities right now. New York is clearly the epicenter of the epidemic here in the United States. And the question remains whether or not we're going to see a spread of that level in other American cities. Right now, there seems to be cities that are highly suspect. If you look at New Orleans, Dallas, Florida, Atlanta, Chicago, Detroit, all those cities have a lot of spread right now, and the rate of spread has increased. Now, the governors in those states have taken steps to mitigate the spread. Some were later than others. And we really need to see whether, in fact, this is an epidemic where New York City is the epicenter of the epidemic and will start to come down that epidemic curve in 2 to 3 weeks, probably closer to 2, or whether or not this is going to be sequential, where New York starts to come down their curve, but other cities are going up theirs.
You mentioned the nation's governors and what they're dealing with tonight. They got a letter today from President Trump. I have it in my hand here. I'll read you an excerpt of it as it's dealing with guidelines for states to be able to make decisions when to perhaps be able to normalize in some respects. This is what we envision, said the president. Our expanding testing capabilities will quickly enable us to publish criteria developed in close coordination with the nation's public health officials and scientists to help classify counties with respects to continued risks posed by the virus. This goes a long way, talking about data-driven criteria being used, doctor, to actually categorize counties in this country as either high risk or medium risk or low risk. Can that be done?
Well, yes, it can be. I mean, this is how you start to transition, whether it's counties or regions. I might look more regionally, but you want to start to think about whether or not you can get an assessment of what the background risk is based on very widespread surveillance. You need widespread surveillance, and if you can demonstrate that transmission has been broken in certain regions and broken nationally, you can start to transition towards a different platform where you move away from these population-based tactics, where you're basically imposing restrictions on entire populations, and you start to impose restrictions on individuals who either have the virus or close contacts of those who've come into contact with people who've been infected. You move away from population-based mitigation towards what we call case-based interventions. And you do that gradually as you start to demonstrate that you've broken off the epidemic transmission, and you can demonstrate that the background rate of transmission is either very low or has broken off entirely. If it's very low, you can move towards other things where, for example, you move away from shelter-in-place orders, and you allow people to go out, but you require them to wear a mask as a substitute, which we know can reduce transmission if someone's infected. So there's ways to slowly transition towards a different platform once you can break the epidemic spread and demonstrate that transmission has broken off in certain parts of the country.
No getting away from the fact that today was the deadliest day so far in the United States because of this virus. And given the letter that the president today sent to the governors, I want to revisit something you discussed last night with us in our town hall. You said there could be some sort of treatment by the summer, perhaps. Maybe not a vaccine by the summer, but some sort of treatment. What specifically were you referring to?
Well, we need a different toolbox, and I think we can have a different toolbox as early as this summer. And that toolbox is going to include very broad-based surveillance, background surveillance, where we just test people randomly. It's going to include a point-of-care diagnostic so doctors can test people in the office very liberally. We need to test people very easily in the office if they come in with signs and symptoms that could be COVID. And if we couple that with some kind of therapeutic, either an antibody that can directly target the virus and can be used as a prophylaxis to prevent infection, as well as treat those who've been infected or been exposed, as well as potentially an antiviral drug that directly targets the viral replication and can be used, potentially effectively early in the course of the disease for people who come in infected who might be at risk of a bad outcome, similar to the way we use Tamiflu in the setting of influenza. I believe we can have that toolbox. There's products in advanced stages of development or middle stages of development. I think they'll move quickly if they demonstrate efficacy. And the surveillance system, we should be able to repurpose some of the massive screening that we've developed right now into a surveillance system that could be quite robust.
In the spirit of last night, I'd like to do a couple of Twitter questions, if I may, from Patty first. How long can someone be asymptomatic and still be contagious? After someone recovers, can they still be carriers of the virus?
Well, the data shows up to 14 days, and that's why the recommendation is to self-quarantine for 14 days when you've been exposed. But the average length of time that someone incubates the virus is 5.1 days. And most of the cases cluster around that, some a little more, up to 7 days. We know that people who've recovered from this can continue to shed the virus, and that's one of the worrisome things. So you can have the virus feel better, but still continue to shed the virus. So this is a nasty bug. This is a bug that's designed to spread. The virus did a good job of mutating itself in ways that makes it very transmissible.
Another interesting question. Since many children are asymptomatic, do you think they are being infected at the same rate as adults? Interesting question to consider.
Yeah, that's one of the unanswered questions right now. We don't know. I happen to believe that kids are getting infected, but they're getting subclinical infection, meaning that they're not becoming symptomatic. And why that is, we don't know. Some people postulate that it's because kids get a lot of coronaviruses, so maybe they have some cross-immunity against this particular virus. Another theory is that a lot of the sequelae from this virus, a lot of the sickness, is from the immune reaction to the virus. And kids with underdeveloped immune systems just don't mount the same immune system as adults do or middle-aged people do. So they're not getting that vigorous immune response that's getting some people in trouble.
Lastly, what should I tell cohabitants of my home located in the middle of the epicenter of the outbreak, presumably he's talking about New York, who want to take a walk or run in the neighborhood? Is it advisable? If so, what mitigants are appropriate? I think a lot of people who have been cooped up are trying to get out and at least get a walk or exercise. What do you tell them in that instance?
Look, it's safe to go outside. There's recommendations that people should isolate in their homes, shelter in place. They can go out for things like groceries, to the pharmacy, to walk a pet, or to exercise. You don't want to discourage people from exercising. You have to practice social distancing if you go out, stay away from other individuals. If you do have a mask in your possession, a mask can help. It can help. It certainly has been demonstrated to reduce your risk of transmitting the infection to others. And that's why you see a lot of countries in Asia mandate the wearing of masks. It can also help incrementally your risk of getting the infection. So I think that there's a lot of people that have masks that are afraid to wear them because we've shamed them in a way. But if you do have it, you're better off wearing it than leaving it at home. I don't encourage people to go out and buy them. There is shortages with healthcare workers. We need to prioritize the healthcare workers. But wearing a bandana or a mask, if you have it in your possession, could help incrementally reduce your risk.
Appreciate your time as always, and certainly entertaining our Twitter questions this evening. Dr. Gottlieb, thank you. This CNBC Special Report, Markets in Turmoil, is coming right back.
Ahead, where China's get-back-to-work policy really stands tonight. Plus, charting the virus. A Wall Street pro trades his stock charting for the virus. An update tonight on what he sees.
Within a matter of days, we laid off 80 people, which is half of our staff.
And one fixture of New York's food scene on what her restaurant is going through as the virus brings business to a halt. Before the break, pictures from around the country on day 88 of the coronavirus crisis.
Welcome back. Russin Daughters has been a New York City institution for more than a century. They've never had a layoff. That is until now. Tonight, fourth-generation owner Nikki Russ Fetterman, in her own words.
Russin Daughters has weathered the Spanish influenza pandemic, wars, recessions, depressions, terrorist attacks, hurricanes, but this is uncharted waters. In 106 years, we've never laid off anyone, and within a matter of days, we laid off 80 people, which is half of our staff. It's a horrible experience. I'm sick to my stomach still thinking about it. It's so hard to tell folks who have been so important to us that the least bad option is to lay them off to get unemployment, knowing that unemployment benefits, at least here in New York State, are unacceptable. You can't tell someone to shelter in place if they don't have the money to pay for that shelter or to feed themselves or their families.
That was Nikki Russ Fetterman tonight, in her own words. Here's where we stand on the virus this evening. The U.S. now has the most cases in the world, more than 81,000. Worldwide, cases have now topped 500,000. General Motors temporarily cutting pay for about 69,000 salaried workers by 20%. And the Indy 500 has been delayed from Memorial Day until late August. Well, for more now on the outbreak, let's bring in Meg Darrell and RBC's biotech analyst Kennen MacKay, who has been tracking the growth of this pandemic. Meg, it's all yours this evening.
Scott, thanks so much. And Kennen, it's great to have you back. I was just looking back at this note that you published March 17th that the U.S. global COVID-19 pandemic is likely to get worse before it gets better. And boy, were you right. Tell us what your modeling shows updated this week.
Thanks, Meg. This is one that is really regrettable to be taking a victory lap on, but still, incredibly scary road ahead of us here. We are projecting U.S. cases to continue to grow. We did see a deceleration in daily new cases earlier this week, but then bounce back growth again. I think cases are still being handicapped by very limited testing here in the U.S. That testing is much better in New York, which is why I think partially there's such a higher awareness of the virus there in New York City. But we're projecting this to be over 100,000 cases here in the U.S., but well before the end of the month, even in our best case scenario here.
Well, we're certainly getting very close to that with 83,000 now. And as we're looking at this chart on the screen, this shows your worst case scenario being that upward line, down to your best case scenario being the horizontal line. What is the U.S. doing under those different scenarios? In order for us to really flatten the curve and get to that best case scenario, what more does the U.S. need to be doing in terms of any restrictions?
Yeah, looking at global examples for this, coming from China, coming from Italy, literally the only impact we've seen on the potential to slow the spread of this virus has been social distancing, has been quarantine. Looking globally, it's taken around 2 weeks. In China, 14 days to see a slowing in the curve following quarantine, to see a shift in sort of the shape of that curve. In Italy, a very similar dynamic, around 11 to sort of 13 days. That data is a little bit more granular to see a slowing, again, in that curve. So looking at the U.S., that's sort of how we're thinking about this. Our worst case scenario is a maintenance of this exponential growth that we're seeing right now. And that's using a doubling time of just under 3 days, 2 to 3 days, 2.7 with the latest numbers here. In our base case scenario, we modeled that exponential growth rate sort of getting cut in half. And again, that's coming from sort of these functions that we're seeing emerge from the data in China, from the data in Italy, about 2 weeks after social distancing is put in place. 2 weeks later, that function shifts again. It slows even more into another function that lasts around 4 weeks, and then one final function with very limited growth 4 weeks later. So that's how we're modeling sort of our different scenarios here.
So that is your base case. Your best case seems to assume we're doing more than we are now. And I've been talking with public health experts and epidemiologists saying the sort of locally driven response in the U.S., with different states making different decisions, even different counties that are right next to each other making different decisions, that is going to potentially slow our ability to flatten our curve. What do you think about that? And does the U.S. need to be doing more on a national level?
No, I think you're exactly right, especially when you look at that data from a national level and when you consider that this truly is a national problem. Obviously, in New York, incredibly scary, incredibly higher numbers. But New York is also doing a lot more testing. Like I said, far more aware of their cases. New York has done literally a quarter of all the testing that's been done in all of America. I think, again, partially what's driving that high number there. I do think across the board, everywhere needs to increase their testing, and we need to see sort of a universal front in order to slow the spread of this virus here.
All right, Kennen, MacKay, we'll continue to follow your modeling. Thank you for joining us tonight.
Thank
Scott,
you,
back
Meg.
over to
Appreciate
you.
it. Yeah.
Meg, thank you very much. Here's what's coming up on this CNBC Special Report tonight. Markets in turmoil.
Next tonight, more on the market run. The Dow is up 15% since Monday. Plus, life inside an emergency room. One doctor, repurposed for frontline duty, shows us what he's seeing. This CNBC Special Report, Markets in Turmoil, is back in 2 minutes.
The virus itself remains front and center.
Confirmed cases of the virus skyrocket. So do jobless claims.
It's a big number, 3,283,000.
But stocks are making a comeback.
Its best three-day run since all the way back in the 30s.
Can the rally hold? This CNBC Special Report, Markets in Turmoil, continues. Once again, here's Scott Wapner.
Can the rally hold? The big question tonight. Let's take you right to the futures, give you an idea of how Friday trading might shape up. Slightly negative across the board at this hour. All three of the major averages right now would open in the red. Stocks did rise, though, for the third straight day. The Dow rising more than 1,300 points. The S&P 500 jumping 6%, while the Nasdaq added more than 5.5%. The Dow today getting a big lift from Boeing, Chevron, and Walgreens, which were all up more than 10% on the day. Chad Morganlander is portfolio manager with Washington Crossing Advisors. Darrell Cronk is chief investment officer with Wells Fargo Wealth and Investment Management. Gentlemen, good to have you both with us. Chad, I come to you first tonight. Tell me how you're feeling about this market this evening.
So although there has been a awful epidemic and it's very, very unsettling for our loved ones' well-being, we believe that the economic will be awful as well. But if you look beyond 2020 into 2021 into 2022, you could see a tremendous amount of opportunity. So we have been buying into this market for the last 2 weeks.
Is that a good strategy tonight, Darrell?
Well, we would probably take a little more caution here, Scott. I mean, history teaches us the deeper the decline, the higher the bounce, and the deeper the retest. So if you go back to 1929, we really had 13 different instances where we've had waterfall shed declines. 9 of those 13 times, 70% of the time, the first low is retested and broken an average of 2 months later. And of the 4 times that it wasn't broken, 3 of the 4 it retested. The only example where it didn't, literally the only time since 1929, was the December 2018 V bottom. So history is certainly on the side to say that 35% decline, 20% recovery likely is going to trade into a test and retest period of time. So we'd be a little careful about, getting too aggressive buying into this 20% 3-day rally.
Disagreement is okay. That's what makes a market. Chad, if you were buying, like you said you were over the past couple of weeks, where were you buying?
So we were looking for quality companies that were consistently growing, consistently profitable. And the critical thing was that they couldn't have a lot of debt on their balance sheet. So we were purchasing companies like Nike, for example, Visa, companies that have great earnings potential 2 to 3 years out. Of course, we are analyzing this and we're expecting a meaningful decline in 2020 when it comes to earnings. But when you go out 5 years, the predictability of these companies is quite high. And of course, you don't have to worry about any liquidity issues.
Darrell, history may be on your side, as you said, but history has never seen the kind of policy response that we've had this time from the Federal Reserve and from the big stimulus package on Capitol Hill.
Yeah, you're right, Scott. And that is the wild card. It's the variable here because obviously the Senate passed package is 10% of 2019 GDP. And if you were to add in what the Fed's doing, you're talking about 30% of GDP in stimulus. That absolutely is going to make a difference, along with just the pent-up economic payback when we do reopen the economy. The point, though, and I think I share Chad's optimism here on the intermediate term, my point is just be really careful here about chasing a 20% retracement from a bottom. Again, history tells you that you have to retest those lows, and we truly believe that you will at some point. Once you get through that phase one downshift, you go into a longer phase two, up and down market that tests and retests before you can finally base that out and make the recovery into the next bull market, which is likely numerous months ahead.
Gentlemen, it's good to talk to you both this evening. Chad Morganlander, Darrell, Cronk, we will see you soon. Mount Sinai Hospital in New York is adapting to practicing medicine in the era of the coronavirus crisis. Dr. John Puskas is the chair of cardiovascular surgery, but he and his team have converted now a cardiovascular ICU unit into a treatment center for COVID-19 patients. This week, we speak to him this evening. Dr. Puskas, it's good to have you on the program. Thank you for being with us.
It's good to be here.
Can you tell me exactly what we're seeing in the hospital tonight?
Well, our intensive care unit, which up until just about 10 days ago was devoted to providing world-class cardiovascular care to a large number of patients in partnership with our cardiologists, has now been converted to a COVID unit. And all but one of our 26 beds is occupied by patients with COVID.
Can you tell me about the process of switching gears?
It's an interesting psychological, logistical, and medical challenge. We have repurposed a terrific team of cardiovascular nurses, mid-levels, and intensive care doctors to take care of a whole different kind of patient. Patients who have not primarily cardiac failure, but now respiratory failure due to the COVID virus.
And the increase in patients that you're seeing, can you characterize it for us in any way?
Well, I can tell you that it is recent and it is accelerating. So that we are now building out a new intensive care unit space within our hospital, compliant with the governor's mandate to increase our ICU capacity by 50%. We will be ahead of that mark within another 2 weeks at least, having built out and changed our step-down units, which formerly took care of cardiovascular patients after their time in the intensive care unit. We're going to change those wards, literally as we speak, into more intensive care beds.
Doctor, can you speak to the issue of the level of concern you and your colleagues have about getting sick yourselves as you're treating some of these patients who are coming in?
Well, in every hospital in the world, there have been reports of healthcare providers contracting the virus. But of course, they can contract it in the community or at work. Everybody is taking the utmost precautions. This is a very, very professional team of healthcare workers, and we are provided with our PPEs, and we use it. But I will also say that the team is committed and dedicated and unflinching.
Doctor, I've said it to every healthcare professional who's been on with us. We are sincerely grateful for all that you and your colleagues are doing. We wish you well tonight.
Thank you.
That's Dr. John Puskas joining us from Mount Sinai Morningside in New York. There is much more ahead on this CNBC Special Report, Markets in Turmoil.
What does China look like now? When we come back, two American business leaders with major operations on the other side of the Great Wall on whether the country is really getting back to work. This CNBC Special Report, Markets in Turmoil, is coming right back.
Back this evening as we show you some of those big gains on Wall Street today. China started feeling the impact of the coronavirus in December, more than 3 months ago. Tonight, we're getting a check on where business stands more than a month after the government urged factories to reopen. Rodney Manzo is the founder and CEO of Anvyl, which helps connect companies with Chinese manufacturers. Peter Baum runs Baum Essex, which makes clothing in China. It's good to have you both with us. Peter, I begin with you. Is China back? And if so, to what extent?
Okay, well, for us, we're predominantly a big box supplier, and our factories are probably 40 to 50% back as of about 2 weeks ago. But that now has changed because of all the closures of various retail operations across the country. They're canceling orders on us or delaying orders, and therefore we have to go back overseas and say to our people, hey, just like you were late coming out of Chinese New Year because of the virus, now we've got the exact problem, and we've got to kind of ask you to either accept the cancellation or hold the shipment until we can start to operate. We have a warehouse in California, and as you know, California is pretty shut down. So it's kind of hard to take things in or ship them out, given the circumstances.
Sure. Rodney, what does your data tell you about the situation in China as compounded by what Peter's describing because of the situation here in the United States and elsewhere around the world?
Yeah, thank you for having me on. Peter brings up a good point, and it shows the difference between nice-have products versus must-have products. Here at Anvyl, we're pulling some data, and what we see amongst the must-have products, it's really rebounding. So the average delay or downtime was 93% right after Chinese New Year. Today, it's about 5% down across the factories in China. There was a 2-month lag in the environment. Now we see roughly a minor lag. So it's a 10-day delay for shipping these must-have products from China into other locations globally.
Peter, what kind of products are we talking about? I mean, demand has completely fallen off a cliff for most things other than paper products and cleaning products, literally.
Well, we're predominantly a consumer products company focused on the home. So we do a lot of things that people would, ceramics, kitchen cutlery, and others. And what happens is, if people don't go to the stores, they're not buying those things. We do have an e-commerce business, but our e-commerce business, again, if your warehouse is shut in California, you can't do very much. So there's basically no demand at this minute. Like I said, a lot of our retailers have canceled or delayed orders out into June already.
Rodney, how quickly, let's say once things start to normalize to some degree, hesitate to even use that word because there's really no visibility, but how quickly can these businesses in China get back to near full capacity?
Yeah, that's a great question. We at Anvyl actually provide visibility, so I would say there is visibility here. As far as getting back, what we see is they are back in a lot of these products, but if you're looking at across other industries and verticals, it's probably about 1 to 2 month delay that they'll start shipping out. Going more to Peter's point, Anvyl powers a lot of the most innovative technology companies on the planet, or direct-to-consumer brands. Those brands are actually thriving now. That business model is showing that it's pretty sound to deliver to the customer's store versus into retail and brick and mortar.
Peter, lastly to you, how do you run a business with little to no visibility at all?
Well, we sit there, we like to be people that think one-off. And what I mean by that is I have one scenario if, for example, May 20th, the mayor reopens the schools in New York City, feels it's safe. Obviously, you can have employees come to the office because they don't have to do childcare. If they don't open the schools, well, then I've got a different scenario as far as working remotely. Then there's the issue, okay, let's say they open up in 90 days. How many of my retail customers are damaged through financially because they have had no revenue for the past 90 days. And then, of course, there's the doomsday scenario, which is this goes on for 6 months. You have 30% unemployment. Tens of thousands of companies go bankrupt, be they big or small. And then that's going to filter back across the globe. It will go to China, and we also work out of the other Asian countries, Vietnam, Cambodia, the Philippines, and Indonesia. So the trickle-down effect from this can be incomprehensible.
So how then do you feel about this delicate debate that's taking place about going back to work and slowly getting the economy working again versus making sure that every citizen in this country is healthy and safe?
Well, not to be flippant, but to give you a question to answer your question, let's say New York, which I know you're there and I'm here, starts to have a decline in the disease. But what happens if Dallas, Chicago, Miami, and all these other cities start to get an explosion of the disease? You may be able to go back to work, but those other places are closed. So how do you reconcile your people working, but there's nothing you can do?
Yeah, understand. Certainly the challenges that exist. Thank you so much, gentlemen, for being with us tonight. Peter and Rodney, we certainly appreciate your time this evening. Well, the NBA was the first sports league to cancel its season after one of its players tested positive for the coronavirus. Now the league is making plans to lead the way back. We'll discuss that next. We're back this evening. Is the NBA moving closer to a possible return to the court? Last night during our CNBC town hall, Dallas Mavericks owner Mark Cuban was optimistic, even if it meant playing games in the meantime with no fans.
I'm just guessing here, speculating, but I think the NBA is going to try to come back as early as we can without spectators, just on basketball, just on TV and streaming, and just give people something to celebrate.
Everybody could use something to cheer about. Let's bring in CNBC Sports business reporter Jabari Young. Jabari, good to see you this evening. What are you hearing on your own?
Well, just that they're running out of time, Scott. They got to make up their mind on what they want to do to save their calendar year. A lot of executives, a lot of agents are sitting back and looking at the league office like, okay, tell us something. What's going on? And now people are just starting to formulate their own plans. And as I wrote, you keep hearing Las Vegas pop up like that's the only option. And, you look at the John Hopkins, coronavirus map. Vegas is not as hard as hit. Nevada in general is not hard hit. So do you consider moving a tournament out there to finish your season just to crown a champion to maybe preserve your calendar year? Because the longer you go and you're talking about eating into September and October, I just don't know if the Players Association are going to agree with that. And they just got to decide something very fast because the draft's on the line, the combine's on the line. What do you do? A lot of people are waiting for answers right now.
I'm sure players are itching to get back. And LeBron James that maybe a month or so ago said he didn't want to play with no fans, I would gather is rethinking things tonight, thinking that it would help if uplift the country.
Absolutely. I had, one exec, and talking to, execs over the past few days, they feel like, maybe this is the NBA. This is their obligation. Listen, Adam Silver has had to overcome a lot, in his time as commissioner of the NBA. This is his moment. It will not get up. It doesn't get any bigger than a moment like this where, you had to suspend games. And now everybody's looking at the NBA, even other leagues like, OK, what next? Remember, the NBA, they want to take credit for being the first to suspend games, which was great on their behalf because you recognize Rudy Gobert report coronavirus. You recognize the health risk. Now people are looking at them like, OK, when are you going to return? Because they can possibly be the blueprint on how teams, at least U.S. teams, get back into action. And believe me, there's a fan base, there's a sports fan base that is sitting home with nothing to do, that's dying for some type of sports action to take place. We'll see if the NBA is one of the first leagues that can get it going again.
I can't take too many more of those reruns of those older games. I want the new ones. Jabari, thanks for your time tonight. It's good to have you on. That's Jabari Young joining us tonight. On day 88 of the coronavirus pandemic, here are the latest headlines this evening. President Trump says a Navy hospital ship will deploy to New York City on Saturday, 3 weeks ahead of schedule. The Senate unanimously passing a $2 trillion stimulus package, and the Dow having its best three-day gain since 1931. Futures fairly flat right now. For all of us here at CNBC, I'm Scott Wapner. Stay well. Shark Tank is next.